It's a very interesting topic when we talk about, building a secure digital finance ecosystem. We have seen in the, past decade, access to digital finance has become more and more easy, more and more, on the click of a button. And when that happens, it is also important to understand the entire ecosystem that works towards making that happen. Whether you are accessing the digital finance through an app that you have downloaded, through a BC agent who is there giving it to you on a phygital model, through maybe an MFI agent at the last mile, or through an API or an SDK on a partner-driven model. And when we talk about ease of access to this digital finance, it becomes extremely critical to understand that there is a whole ecosystem that comes into play. There are regulations, there are legal compliances, there are technology, there is an architecture that goes in, there are API layers, so on and so forth. And then there is the entire risk framework that comes into play to ensure that, when that digital finance is being made accessible to you at that point in time, it is done in the most simplest yet the most monitored and secured manner. So with this, quick introduction, I think, let's jump into the panel because we are running a little bit late on the panel timing. And, we have Bertram from Protean. So Bertram, I'm going to start with you. Protean, formerly NSDL governance, of course, has been pioneer when we talk about digital public infrastructure. So whether we talk about the PAN and then moving on to, I remember last time I was in your office, somebody mentioned there was some 256 or 156 API stacks that you had created, just enabling all these services. A lot of this, I'm sure, also contribute to the, the digital finance ecosystem as well. So Bertram, to you, I would like your views on open infrastructure when we talk about CKYC, when we talk about PAN, NPS, digital security, consent-based security, resilience, architecture. How do all these things from your point of view, or specifically at Protean, do you, put into play when it comes to, making digital finance accessible?
Thanks, Vaibhav, and thanks Business World for having me here. So at the outset, I think Protean, like you mentioned, needs no introduction. The company has been, for the last 30 years, very silently been building a lot of the nationally critical infrastructure, starting with a depository back in 95, 96, and then building on towards multiple other things. More recently working on new ecosystems like e-commerce, insurance. Recently we spoke about Bima Shugam as well. So I think the way we look at building digital infrastructure is more like building a railroad or building a road. It's the physical infrastructure equivalent in a digital world. And without building that road and building it with the right controls and with the right thought process of how vehicles are going to use that road in future, I think that's where it has to be enabling. So one of the challenges obviously we have when building something which is touching the lives of almost every Indian, and I think when we looked at some of the data, we realized that we kind of serve almost every Indian in some shape or form with some of the initiatives that we do today. And if I look at two dimensions, one is today in a digital world which has kind of really spiraled in the last decade on the back of the telecom network, on the back of some of the work that we have seen on the India stack, the way the digital banking and the digital ecosystem at large has really rapidly scaled up and evolved, we see the need for two controls to kind of come into play to build a more secure finance ecosystem. One is consented data. I think we can all agree that today, looking at the number of calls that we get, whether it's a telemarketer or whether it is a cross-sell that we receive, sometimes that little intuition that you had a conversation and your phone just throws the ad a few minutes later, it's kind of a really scary phenomenon. Whether it's a coincidence, nobody knows. But the fact that there's data out there which is being actively monetized is something which is a concern. So how do we kind of leverage some of the thinking of even the government when it comes to the whole consent framework and the new DPDP Act, which is in process of being implemented? I think that's one pillar which we really need to streamline across the ecosystem. I think we are already invested in that space in some shape and form as an account aggregator, but I think AAs are more, as we see it, as sectoral consent managers. Similarly, we have done some work for the agriculture sector in building out what's called AgriStack, which is again an AA equivalent for the Ministry of Agriculture. If I look at a non-regulated or a non-sectoral space, which is broad-based under MITI's guidance, I think there is a lot of unknown elements out there. Like, how will a citizen tomorrow give access to data cutting across multiple sectors? Is it going to require him to provide 5 OTPs? It's going to be a very cumbersome experience. And that's where I really worry if some of this design isn't really thought through well from the start. We are going to have a problem both at the experience level and at the implementation as well. The second dimension I wanted to talk about was on the fraud side of it. And I think we can all agree, with digital booming the way it is, the kind of fraud that we see in the banking sector specifically, whether it's mule accounts or fraudulent transactions or phishing, I think we are far from saying that we are in a secure digital, ideal state. And that's something which we really would love to solve at an ecosystem level. Today, when I look at the problem of mule accounts to start with, if we just take one example, the problem is even if one bank catches a fraudster, it becomes extremely difficult in real time to let everyone know that this is a person that should not be trusted. And unfortunately today, you don't have those controls. There is no easy mechanism of how to build that. And I think that's again something which both regulator and the ecosystem will have to kind of come together and solve it. But happy to take on more questions later. Thanks.
No, so very interesting, Bertram, and we will spend maybe a couple of more minutes on 2 points that you mentioned. So one is, yes, how telco played an important role to be the backbone, and now how we started from there, and based on that there are so many consent-based data accesses available. Recently, Airtel introduced this Airtel spam, and especially iPhone users did not have, what do you call it, Truecaller, right? And that's when this Airtel spam really now helps. At least it helps me, because there was a brief time in between when I used to get a lot of spam, and I tried to register on the DND, re-registered, nothing worked. Again, on the consent-based, and it comes from the fact, a couple of apps that I launched. I remember a discussion with my CTO where he was saying that, Vaibhav, just make the user, I agree, I agree, I agree. It's a single I agree, by the way, on the terms, and the app will have access to almost anything and everything that the user is doing. And it was really scary for me to even think from a user perspective that the type of digital footprint that I am living just inside my mobile phone, and the type of access that people may have to my digital footprint can reveal so much information about me, right? And now we are talking about, of course, staying on the topic digital finance, and the type of digital footprints that are already available in the market, what you just said, and access for, lenders, and let's leave it at lenders, whether it's fintech, regulated entities, will not get into that, but access that the lenders probably have to those, to that data for that matter, and consent plays an extremely important role over there, and through which manner the consent has been given by the user also is extremely critical over there, because a consent can be, a simple something that I did not realize, but hey, I gave the consent, because I was just scrolling to something and I clicked on yes, I agree, or okay, yes, take me there, and that can be construed as a consent, but of course, how the regulator views it is also very critical. And the second one, the second part, where you talk about, use case specifics, so doing things on the agri side and stuff, that is becoming very critical today, Bertram, because, there are so many innovations that are happening on the agri-tech side, that are happening on the clean tech side. So whatever data, MITI, NPCI, RBI, everywhere, whatever data is available, if that data can be leveraged into the way, I know at least at the transport level, for the Vahan and Sarthi, the way the data was leveraged through APIs. Very simple, but it did the trick. If something like that can be developed on the agri side, that would be good. So thanks for that. I'm going to take a cue from what Bertram said and come to you, Jaya. And we will come to the risk part of it, because BCT Digital has been, one of the pioneers globally when it comes to, risk-driven frameworks and models around that. I want to understand your views, probably also at the global level, not just at the domestic level, with terms of the use of AI in risk framework, and how we probably look at leveraging it to ensure that the entire digital finance ecosystem accessibility is done in a very safe and secure manner.
Thank you for that. So AI, as you know, used to be called predictive analytics years ago. I mean, you used past predicts the future, and what is a gut feel at a branch manager level is actually gut feel into a science. That's the entire concept of AI and risk from that perspective. So kind of taking it from the layman to where we use on a regular basis, AI is used to not only supplement what a human does, it's also to supplement what a human cannot do, which is essentially, as soon as you, let's say you set up a beneficiary in a bank, you get 3,000 data points on the beneficiary today, which is essentially is the beneficiary part of a company that has frequent director change? Have they been subject to management audits? Are there are they on the board of companies that have been blacklisted? So similar to that, you get up to 3,000 data points without draining the triggers, and that is just noise for a human being. But for an AI engine, it is something that provides you statistical insights. It actually tells you of that 3,000 variables, 10 are statistically significant, and you have a scoring mechanism that actually goes in and says that with 86.3% probability, they're diverting funds. And this enables you and the regulator to also kind of say, flag me those accounts. And therefore, you look at it from a preventive perspective rather than a forensic perspective. The biggest challenge most countries like India had was once something leaves the bank, you have to go through a lot of legal action to kind of retrieve even a portion of it. This varies by country because you said global perspective. So the challenges are different across different countries. Some countries have the problem of how do you use the data. It's not about the insights that come. And in India, we've had the problem from a fraudulent perspective, even from a loan side, to look at both willingness and ability to pay. The willingness constitutes the fraud, and the second is the ability, which is common across countries. So when you look at how is AI being used, it's more about timely action, it's about real-time action, it's about insights that go beyond the realm of human interaction, and it's to also look at it from a preventive perspective rather than a forensic perspective. Now that's just an example of how it's used in fraud analytics, but AI increasingly is also used to look at creation of data sets that go into when you don't have a lot of data, what do you do? When you have a lot of data, how do you parse through it and kind of look at it from what's statistically significant? What is a qualifying score? How do you produce data when you don't have through other means? So these are some of the enabling uses of AI that we use increasingly. And from a regulatory perspective, I think RBI has been one of the few central banks around the world that has actually been proactive in it. There was a sandbox that talked about real-time use prevention using AI as a subject. MuleHunter.ai was launched. We were doing Mule Hunter in accounts, just to go back to Bertram's point, for about 10 years. We were monitoring staff accounts, as an example. And that was like an early warning signal to look at, what could be potentially areas of fraud. So a lot of interesting use cases, a lot of applications. The challenges are different across the globe. And it's also about what you can use, what you can't use, and what are some of the triggers and how do you kind of go from it.
Thanks, Jaya. A couple of very interesting points there. But I'm recently I've been extremely intrigued by, the unidentified patterns part when it comes to, these frauds that are happening, because there have been a lot of solutions, there have been a lot of logic algorithm about, identified patterns. Okay. Mule accounts, yes, it has been an issue at least for half a decade now, and it has been a persistent issue, and there have been a lot of solutions that have been coming towards it. But the unidentified patterns part is becoming very, very critical. And I've been doing some research and trying to find some solution, because recently we faced this problem, okay, in one of the fintechs, where I'm a part of it. There we faced this, funds came from somewhere, it passed through some 7-8 accounts, and then, by the time the ecosystem realized it and it was within the hour, okay, the funds had actually vanished. And vanished means it had moved out of the system, and we were like, there was no way to trace it, okay. And then we tried to do some research on that, and we identified at the bank level, we identified that, this was persistently happening in one of the channels, okay, and that is where, that entire aspect of unidentified patterns when it comes to, this kind of frauds came in. And while on that subject, I'm going to move to, Atrideb, CRIF, because, yeah.
Just on the unidentified patterns, I think risk, in the earlier session, the keynote speaker had spoke about risk and compliance in supervisory technology not being that prevalent in India, and we still have to make our mark. I think that we are kind of have made significant dents in that space, and risk and compliance and AI-based risk and compliance, pattern analysis, and how it applies to different markets is a segment that we've actually made quite a lot of progress in the last few years, and that comes from making risk and compliance a more a transparent process, which is essentially, it used to be a black box. People said risk and compliance, I don't know what's being there, I don't know what the calculations are, but here's how it is. If you need any changes to be made through it, reach to a global provider, they'll send programmers and they'll fix it. That's basically what we don't want to have. The more we make in India, the more we kind of take it to the globe. I think the transparency elements of kind of providing the parallel runs and telling you what's behind that engine, and your ability to kind of modify, create your own cohorts, create your own confidence intervals, that's a significant trend. And that comes from making it more open source, making it more transparent, and then kind of giving you the view to the world.
I think, and banks in India have, have started being open about it. They have started being, at least I can talk about the, private banks, the small finance bank and the payments bank. I will not speak on behalf of the PSU banks. I am not too privy to the thought process over there, but banks have started being more open about it. Recently we saw some solutions getting deployed for, bringing the false positives and stuff. But yeah, Atrideb, coming to you, you represent the bureau, right? And when we are talking about all the data points that Bertram and then subsequently Jaya spoke about, now there is a lot of reliance on, Jaya mentioned there are some, the moment you enter the consumer details, you probably get some 3,000 data points, right? A lot of these data points would be coming from bureaus like yours. There has been heavy reliance on the bureau data. Okay, bureaus have been established for a while now. There is a lot of heavy reliance on that. But then there is a lot of alternate data that has also been taken for new to credit customers as well, because probably there is some anchor who is ready to take certain risk or give a stop loss supply kind of a comfort. But when it comes to this alternate data and probably clubbing it with the bureau data, what are your views on that? How can those be clubbed together, combined together to give a more better access to this entire digital finance ecosystem?
Thank you. I think my voice will be slightly alternate because I have a bad cold, so apologies on that. I think from a digital finance standpoint, where the customer is faceless in terms of where you only have the information of the name of the customer, maybe the mobile number and the email ID when they apply. The question is why alternate? Because sometimes the visibility of the data points in the credit bureau is not there, in the sense that they might be a thin file, meaning the total number of trade lines that they have in the bureau before is very less. It could be the depth of the history that they have in the credit bureau is very less. And this is the information where I don't know much about the customer, right? And that is where the problem arises. So the first question when anyone is looking at digital finance is that what percentage of my customer base is this? Just to size the problem to begin with, right? And there would be a percentage where they have enough bureau depth and enough bureau history, okay? So if I break this where there is enough bureau depth and enough bureau history, the first rule is to maximize on that information to provide that risk differentiation. How do you provide that differentiation? Traditional bureau scores, which is, let's say, the CRIF score, which predicts the standard 90 days past due in the next 12 months, doesn't work in small ticket loans. You need a much, much more aggressive product-specific bad definition to solve for it. That's number one. So even when you talk about alternate data, it could be slightly alternative scoring algorithms on traditional data that also solves part of the problem to begin with. And let's say that is a percentage, because if I look at who applies for the small ticket loans, be it on the consumer side or be it on the MSME side, at least 50 to 60% of those players would have bureau debt, okay? And that is where you plug in alternative scoring engines, because that is information you cannot lose. The second thing is that when now I come to the alternative data where the bureau thins out, what are the alternative data points? You have data on their SMSs that you can take in terms of, you have data from their banking, if they are giving their banking, you have the AA channels, account aggregator channels to get the data, and then you can also understand in terms of what has been the credits, debits, check bounces. You can have access to their GST data if there are entrepreneurs where you can mine them, right? And it is already in the practice where you are creating scorecards with GST data. We created one for one of the players. The banks are creating them, the NBFCs are creating them, so it's not new. You are doing that already. You can create scoring algorithms from banking. We have done it, others are doing it. And it is a product also CRIF has, where you create banking scorecards based on the banking data. Now, the question is, and this is where I come in, how do you use them, right? Now, each data source, be it the bureau or be it the non-bureau, would have its own risks of stability and precision, okay? So whenever, so for example, let's say you are having a meal, right? And you have maybe a vara and maybe, let's say, a dessert together. And this is what gives the flavors of the data, traditional and alternate. You keep them separate, right? You don't have it together. So the basic premise is that if you're getting data from alternative sources and traditional sources, keep them modular, number one, so that you avoid any risk of one source of data contaminating the other source. And if you're creating an algorithm of prediction, right, create an algorithm purely on bureau, purely on banking, purely on GST, and then stitch all the three together. Because if anything happens on each of the data source, you are at least insured on the other two, which would still fire in the most effective manner, okay? Coming back to one point that Jaya mentioned in terms of AI and ML, what we have also understood is that typically in these kind of data sources, which is the bureau, which is the open banking or the banking or the GST, these are mostly structured data sets, right? And what we have realized is machine learning is enough for that matter in order to crack these algorithms. Because AI is somewhere where we bring in where, of course, the data is very complex and it is not being able to done. So, and if I touch the compliance angle, it is okay as per the Indian compliance to implement machine learning models. It's not a problem. It is just that we need to explain it in a better way, right? RBI never says that you cannot. You just need to explain and make it open when you are putting it. So bringing all together, the usage of alternate data is valid, but please also maximize the usage of traditional data first, because that is basic and you cannot neglect it. And it is only empirically. So today, let's say I take an example of our competitor where, okay, if the CIBIL score or the CRIF score is above 700, the customer is good. We have this hypothesis within, because that is a saying that we go with. It's not true. It could be very, very different when you empirically test it on the kind of consumers that you're catering to. So please empirically test it out to understand that what works first, rather than having a premeditated guess that this is good and this is bad. So that is what I would have to say. Thank you.
Sure, Atrideb, and to the greatest extent, maybe 9 out of 10 times I agree with you. I disagree on one thing because, especially if we talk about, certain segments where we are talking about, there will be a micro entrepreneur where, there is a -1 new to credit kind of a entity or a person. There, probably the scorecard A, scorecard B would play a far larger role. But yeah, 99 out of 100 times and that is where we should be focusing on, because that is where the entire digital finance ecosystem is today focused on. Taking a cue from what Atrideb said, Jaya, I'm going to move to you. Okay, and this entire digital finance ecosystem is become a connected world together today, okay, an interconnected world rather. Now, there are a lot of aspects when it comes to governance, policy, framework, the technology architecture, the digital transformation. A lot of times these processes are available, a lot of times the processes or journeys are not available within the regulated institutions. And that is where it also becomes critical for the, for that institution or for the fintech which is partnering with the institution to, fast track that so that the digital finance product actually reaches the last mile in a, a time-bound manner. So what is it that you feel can be done to fast track or intertwine these things together? And how is it that, through your experience, you are contributing to that?
Thanks, Vaibhav. And I think, like my other panelists, they're all from the product segment. I come from a very different segment, which is, and with my 27 years of banking experience, I can say for sure, one of the challenges most of us face at the ground level is with respect to implementing what we have. And that integration between what we want as a product that we have and what we really want is the real challenge. And to quote it, I'll just give an example. So we have UPI, which is truly a digital payment, and we all swear by it in the entire in the global system. And then we have the AA, the account aggregators who come out with consent, database, data-driven approach. Now, both of these are so well, so people have got adapted to it so easily. But what is critical? Critical is about making sure the data is secure, data is compliant, and data is foremost trustworthy. That is, we are able to believe the entire system. Now, coming to the, I think there are four critical pieces that we need to look at when we talk about all this intertwining the entire pieces. The first is compliance is not an option we have right now. Compliance is foundation right now. Without being compliant, without ensuring that every data is layered with security, layered with making sure that there is no leakage of any kind anywhere is very important. So making sure that whatever solution that we deploy actually ensures that there is the entire data is trustworthy and there is no leakage of data happening anywhere else. The second point that I want to make a point is that compliance is no more a checklist. It's actually strategic. Every organization must have a very, very strong compliance or driven, the whole model has to be so strong, and all the layers have to be so intertwined with the security aspect of it, so that there is it is not just a check saying, okay, I also have a fraud system, I also have a compliant based system. No, it cannot be. How do you manage a customer complaint? Okay, the redressal mechanism has to be so strong. You cannot wait in today's scenario to be a reactive mode. You have to be proactive. You have to have methods and technologies in which things come to you forefront rather than thinking about it. Because today we have so many cases where customers get duped because they click onto a link and then finally the money is lost, and then you have to run behind all these, the various structures to get back the money, which half the time you don't get back the money. The third critical piece, which I also feel, is that there is no more a life of silo now. Everybody needs to collaborate. That is, be it a fintech, the regulators, the banking system. Everybody needs to be collaborative in their approach. It cannot say that I have a process and it works seamlessly well. It doesn't work. Most of the time we feel that many things fail or gets dropped between the cracks because the implementation between the segments are not made very clear. And that's very, very important for us to make sure that there's a seamless integration of the process end to end. And fourth is the very critical, the other last point that I want to make is with respect to knowledge and education of the people who use the technologies, right? Because many a times we find that people click on a link and then lead up to loss of money. The rural segment, the semi-urban segment, where there's so much of digital, we push digital processes through, but we really fail to give them the digital knowledge, right? The digital literacy that is required. The need, what is the risk involved if somebody does something wrong? It's very important for us to make sure that. So these 4 aspects which I mentioned are very, very critical as far as the compliance and the security angle is concerned. And what we have seen most of the time is everybody does their job, but everybody does it very independently. There is no end-to-end integration or a collaborative approach to make sure. So today there's no, it's not a time of saying that, I have done my job, or, this is my silo, I have done what I want. It's not that way. It has to be a very collaborative approach, end-to-end, to make sure that the entire ecosystem works together to give a very, very, trustworthy, secure and a compliant output as far as our digital products are concerned.
Thank you, Jaya. And I somewhere also feel that the entire stitching together of right from where you conceive the product to where you deliver the product becomes extremely critical. And just a PPAC or a product note is not the answer, but getting the right people with the right set of technologies and the right algorithms to stitch it together is very critical. And we have seen it in our banking days, right? Sometimes a simplest of the product may take 12 months, 14 months to launch, and sometimes the most complex of the products, with, of course, the involvement of all these organizations that are here, right, from Protean to CRIF to Krayontek to BCT Digital, can probably be done in a 3-month short span as well. And that is, my friends, the power of, Fintech. And while we are, celebrating the BW Festival of Fintech over here, so we are at the fag end of the session, and before we dwell into a last maybe a 30-second, 1 minute kind of a closure note from each of the speaker, one point that I wanted to make is the convergence of these products that you see at the last mile. When you access these products, there is a lot of things that go in the back end. It's like this: when you see a movie that is on the theater, okay, or on your OTT platform, you see the end result. It is the same with Fintech, it is the same with BFSI as well. The loan that you are accessing, okay, the payment that you are making, the banking transaction that you are carrying out, the insurance that you are probably paying the premium for, okay, the mutual fund that you are booking, the stock that you are buying. At the end of the day, the transaction is one click today. But what happens in the back end is where this entire, things goes on. And today, this entire day, I'm sure, the speakers will dwell into a lot of details of what gets orchestrated at the back end for that thing to happen. Do keep it in mind that there is a lot of orchestration happening at the back end. That's a combination of, risk, compliance, legal, technology, multiple entities, multiple, regulations and stuff. And with that, maybe a last max 20-30 second closure remark from each speaker, and we would be done. Jaya, we'll start with you.
Just taking off on your note, the power of technology is felt when it's not working. So I think there's a lot of orchestration happening, and user experience needs to be seamless. And rest is all, part of the parcel. And technology is always an enabler. It's not something that you lead with. So that's where I would kind of take that.
Bertram?
I think my parting line would be, we don't need to choose between innovation and trust. We somewhere need to kind of engineer trust into innovation. And I think the way we have seen in the last decade, digital really get to where we are today and celebrating the milestones we have achieved as an ecosystem. I'm just thinking 10 years forward. And if we continue kind of scaling with all of these new interventions at the same space at which we are today, what would we need to do in the next 10 years to kind of address a lot of the open issues which we see already in place today? So like we already spoke about some of them which have been unaddressed. What more can we do, and how fast can we kind of solve for that?
Jaya?
From my side, I would say that processes have to be intuitive. It has to be user friendly, and also it has to be secure, compliant. That's no more a compromise on any of these right now. So I think I think most important is all of us have to work collaboratively to deliver this last mile of the strong world called being compliant and secure.
Atri?
So last comments from my side would be, what are we doing to enable this segment? And if I look at in terms of what the CRIF journey has been, we have created alternate scores on traditional data to enable fintech. We have developed a product which is on banking and open banking, which we are engaging with a lot of customers. So if I look at in the last 6 months, we have engaged and with multiple fintech players to enable them with a balance of risk as well as scale. And I think we would continue our journey of innovation in this particular area. Thank you.
Thank you, everyone. Thank you. Have a great day ahead.